Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Already 13 problems we have completed on electricity company accounts. Now in this video I'm going to solve the remaining problems 14, 15, 16. So if you have watched the earlier videos till this time, I think you will get a lot of confidence on solving the problems of electricity companies. So if you have not watched the earlier videos, you cannot be able to understand now, because the problems are based on the provisions of Electricity Companies Act, and those provisions I've already explained in the earlier videos. So watch the first video on electricity company regarding the introduction, theory, provisions regarding how to make the financial statements of electricity companies. So starting videos are very important. So if you want a complete grasp on the subject, watch the first introduction video, then starting short problems, then only you can be able to understand now. So if you are new to my channel, I suggest you to go to the playlist of my channel. I have uploaded so many videos on different topics, different subjects like financial accounting, advanced accounting, cost accounting, corporate accounting, managerial accounting, income tax, statistics, financial management, investment management. So many videos I have uploaded. Select your subject, select the topic, watch the video and increase your knowledge, increase your confidence on the subject. Now, before starting the next 14th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before start watching the problems video. Now 14th problem I am reading out. From the following information and details relating to the year ended 31st March 2005 and bearing in mind the provisions of Electricity Supply Act 1948, indicate the disposal of profit of X Electricity Corporation Limited. So we are required to show the distribution of surplus, disposal of surplus. So for finding out the disposal of surplus, first we need surplus. For calculating surplus, we need reasonable return. For calculating reasonable return, we need a capital base. So step by step we have to calculate capital base, then reasonable return, then surplus, then disposal of surplus. So what is the information given? Amounts. Net profit before charging debenture interest. See here, net profit before charging debenture interest means we have to deduct debenture interest, we'll get the clear profit. We'll get the clear profit. So net profit before interest minus interest on debentures, the resulting figure is called clear profit. From clear profit, we deduct reasonable return, we'll get the surplus. Now, fixed asset addition item. Now I am directly coming to the problem. Calculation of capital base. You must, after doing so many problems, you are in a position which are the items to be added and which are the items to be deducted. In the last so many problems I have explained you time to time. So fixed original cost of fixed asset 4 crore 20 lakh, that is given 4 crore 20 lakh. Depreciation written off on fixed assets, deduction item. Depreciation on fixed asset 98 lakh. Then loan from electricity board, deduction item. Loan from SEB, State Electricity Board, 1 crore 20 lakh. Then 6% investment of reserve fund. So income from reserve fund investment, that will be taken while calculating reasonable return, not now. While calculating capital base, we don't require return on reserve fund investment. Here we will take. Next, 6% investment of contingency reserve. So contingency reserve investment will be taken under additional items. Here you can see investment against contingency reserve 76 lakh. Then tariff and dividend control reserve, deduction item. Tariff and dividend control reserve. Here balance of tariff and dividend control reserve 8 lakh 40,000. Security deposit of customers, deduction item. Security deposit from customers 4 lakh 84,000. Customers contribution to main lines. The main lines are the fixed asset. So customers contribution towards fixed asset will be deducted from fixed asset. Will be deducted from fixed asset. The original cost of fixed asset minus amount contributed by customers for main lines. Deduct it. Then preliminary expenses. It is intangible assets. Cost of intangibles. The preliminary expenses will be taken additional items. Average balance of current assets excluding customers' balances of 6,20,000 is 23,70,000. So this 23,70,000 does not include customers' balances. We should not consider. We should not take into account customers' balances. 23,70,000 directly we take. The average of current assets excluding customers' balance. Then development reserve. Here development reserve. Balance of development reserve 4,40,000. 10% debenture interest paid in the year 7,50,000. Now see here. 10% debenture interest. So interest 10% comes to 7,50,000. In other words, debentures are 75 lakh. When debentures are 75 lakh, 10% of 75 lakh, you will get 7,50,000. So here interest is given 7,50,000. So in other words, we can say debentures are 75 lakh. So indirectly it is given, not directly. Indirectly it is given that 10% debenture interest paid in the year 7,50,000. So this 7,50,000 is not debenture, it is the interest on debenture. So debentures are 75 lakh. So here you can say debentures are 75 lakh. Then the Reserve Bank of India rate of interest was 8%. So bank rate is 8%. That's all. I have explained you all the points given in the problem where the items will come. So addition items, original cost of fixed assets minus customers' contributions towards fixed asset, deduct. Then we'll take preliminary expenses, intangibles, investments against contingency reserve, and average of current assets excluding the customer's balances. We'll get 20. Add up A point. 5 crore 17,90,000. Now deductions. Depreciation on fixed assets, loan from State Electricity Board, debentures, security deposit from customers, balance in tariff and dividend control reserve, balance in development reserve. Every problem we are taking the same items. Right? So total of deduction items 3 crore 10,64,000. A minus B. A minus B, you will get the capital base. So ultimately we got capital base 2 crore 7,26,000. Now the next step is calculating the reasonable return, RR. 5 items you have to remember. Only 5 items will come. The first, return on capital base at bank rate plus 2%. In the problem, last line bank rate is given 8%. So we add up 2% to 10%. 10% on capital base. Capital base is 2 crore 7,26,000. 10% of 2 crore 7,26,000. That comes to 20,72,600. Second, income from reserve fund investment. So income from reserve fund investment, in the problem it is given reserve fund investment are 90 lakh and the return is at the rate of 6% given in the problem. So 6% of 90 lakh, 5,40,000. Then half percent. Half percent on loan from SEB, State Electricity Board. So how much is the loan from SEB? 1 crore 20 lakh. So 0.5% of 1 crore 20 lakh, 60,000. Then 0.5% on debentures. Debentures are 75 lakh. So 0.5% of 75 lakh, it comes to 37,500. 0.5% on development reserve. Development reserve are 4,40,000. So 0.5% of 4,40,000, 2,200. Take the total RR, reasonable return, 27,12,300. 27,12,300 is the RR, reasonable return. 2 steps completed. First step, capital base. Second step, reasonable return. Third step, we have to find out the profit. Surplus. The profit before debenture interest is given 35,100. And debenture interest is given 7,50,000. Interest on debentures 7,50,000 given in the problem. So debenture interest 7,50,000, deduct 27,50,100. 27,50,100 is the clear profit. From clear profit, deduct RR. Deduct RR 27,12,300. Deduct. So remaining amount is 37,800 is the surplus. Now disposal of surplus. Because the surplus is below 5% of RR. The surplus is below 5% of IRR. So 1/3 of surplus is for free use of the company. Free use of the company. Then 12,600. Half of the balance transferred to tariff and dividend control reserve. So balance 37,800 minus 12,600. That comes to 25,200. Half 12,600. Then remaining half transferred to consumer benefit reserve 12,600. So total surplus 37,800. Now final distribution is transfer to consumer rebate reserve 12,600, transfer to tariff and dividend control reserve 12,600, and at the disposal of the company is 27,24,900. So total clear profit 27,50,100. That's all. So this is the total profit, total clear profit. So this is the end of problem number 14. Come on, now we'll start the next problem, 15th. The following balances relate to an electricity company and pertain to its accounts for the year ended 31st December 2004. The amount capital, share capital 1 crore. Reserve fund, share capital we don't require for calculating the surplus. Then reserve fund invested in 5% government securities at par. So income on reserve fund investment, that will be taken under reasonable return. Next, contingency reserve invested in 6% state government loan. So investment in for contingency reserve, that will be taken in addition items. So here you can see investment against contingency reserve 20 lakh, it is given in the board. Loan from electricity board, state electricity board, that's a deduction item. Loan from SEB 30 lakh. Next comes 11% debentures. So debenture again, it's a deduction item. So debentures will be given 8 lakh. Development reserve, again it is a deduction item. So development reserve here, balance of development reserve 10 lakh. Next comes fixed assets, very first item, addition item. So fixed assets, original cost of fixed asset 2 crore. Depreciation reserve on fixed assets, deduction item. Depreciation on fixed asset 80 lakh. Consumers deposit. So deposit received from customers, deduction item. So security deposit from customers 75 lakh. Next comes amount contributed by consumers towards fixed asset. So this amount contributed by customers towards fixed asset will be deducted from fixed asset. 2 lakh rupees deducted. Then intangible assets. So cost of intangible assets 5 lakh, addition items. Tariff and dividend control reserve, deduction item. Balance of tariff and dividend control reserve 6 lakh. Current assets monthly average. Here monthly average of current assets 20 lakh. Next paragraph. The company earned a post-tax profit of rupees 9 lakhs. Post-tax means after tax. So profit earned after tax, that is the clear profit. That is the clear profit. From clear profit we deduct reasonable return to get surplus. Here you can see. Profit after tax, this is nothing but the clear profit, 9 lakh. From this clear profit deduct reasonable return to get the surplus. Then show how the profits of the company will be dealt with under the provisions of Electricity Act, assuming that the bank rate during the year was 8%. Bank rate 8%. That's exactly similar to the previous problem. So after doing so many problems, you are completely acquainted, perfect in finding out the surplus and the disposal of surplus. First we need capital base. Original cost of fixed asset minus amount contributed by the customers towards fixed asset. Then we take cost of intangible asset, investment against contingency reserve, and monthly average of current assets, 4 items addition. Always, every time. Then less deduction. First deduction always will be depreciation on fixed asset. Second, loan from electricity board. Third, debentures. These 3 items are compulsory in every problem we are having. Security deposit from customers. Then balance of tariff and dividend control reserve. Balance in development reserve. These are the items of deduction. So total deduction 2 crore 9 lakh. Total addition 2 crore 43 lakh. So 243 minus 209. 34 lakh is the capital base. Now we calculate reasonable return. 5 items. Already we know it, 5 items. The first item, return on capital base at bank rate plus 2%. In the problem, bank rate is given 8%. So 8 plus 2, 10%. So 10% on capital base, 34 lakh. So 10% of 34 lakh, 3 lakh 40,000. This is the return on capital base. Second, income on reserve fund investment. It is given in the problem reserve fund investment are 60 lakh and the return is at the rate of 5%. So 5% of 60 lakh, 3 lakh. 0.5% on loan from electricity board. Loan from SEB, 30 lakh. So 0.5% of 30 lakh, 15,000. 0.5% on debentures. Debentures are 8 lakh. So 0.5% of 8 lakh, 4,000. Then 0.5% on development reserve. Development reserve are 10 lakh. So 0.5% of 10 lakh, 5,000. Take the total, 6,64,000 is the reasonable return. Reasonable return. Now, calculation of surplus. Clear profit, profit after tax 9 lakh minus reasonable return 6,64,000. So surplus available is 2,36,000. 3 steps completed. We have calculated capital base, we have calculated reasonable return, we have calculated surplus. Now disposal of surplus according to the provisions of Electricity Companies Act. Already step by step we have seen in the previous problem. The first step A, calculating 20% of RR, reasonable return. Reasonable return 6,64,000. So 20% of 6,64,000, 1,32,800, call it as A. Second step, 5% of RR, 5% of 6,64,000, 33,200, call it as B. Third step, 1/3 of A. So 1/3 of 1,32,800, it comes to 44,267, call it as C. We got A, we got B, we got C. A, 20% of RR, B, 5% of RR, C, 1/3 of A. A, B, C aa gaya. Now B or C, whichever is less, B or C, whichever is less, we call it as D. We call it as D, and this will be available for free use of the company. Free use of the company. Now B or C, whichever is lower, 44,267 or 33,200, whichever is lower, 33,200 is lower. So call it as D. Call it as D. And this is available for free use of the company. For free use of the company. Now surplus minus A, that will be transferred to consumer benefit reserve. Surplus minus A. How much is the surplus here? 2,36,000 is the surplus. Minus A. How much is A? 1,32,800. So 2,36,000 minus 132,800, 1,03,200. This will be transferred to consumer rebate reserve or consumer benefit reserve. Now we calculate A minus D. A minus D. A is 1,32,800 and D is 33,200. So 132,800 minus 33,200, you will get 99,600. 99,600 is A minus D. Now half, 50% of A minus D will be transferred to consumer benefit reserve and remaining 50% will be transferred to tariff and dividend control reserve. So 50% of 99,600, 49,800. This 49,800 is transferred to consumer benefit reserve. Remaining 50% will be transferred to tariff and dividend control reserve. 50% of A minus D, 50% of 99,600, 49,800 transferred to tariff and dividend control reserve. Finished. Now final distribution. Actually the surplus will be distributed between 3. First, transfer to tariff and dividend control reserve. Second, transfer to consumer benefit reserve. And third, free use of the company. All these calculations we have completed. Now first, transfer to tariff and dividend control reserve. Here we have calculated 49,800 transfer to tariff and dividend control reserve. First over. Second, transfer to consumer benefit reserve. 2 times we have transferred to consumer benefit reserve. First of all, 1,03,000. 1,03,200 will be transferred to consumer benefit reserve. First time. Second time, 49,800 transferred to consumer benefit reserve. So add up 1,03,200, 49,800, 1,53,000. This is the amount transferred to consumer benefit reserve. Lastly, free use of the company. D point. Here. How much amount we have transferred to free use of the company? 33,200. 33,200. Take the total, you must get the surplus. How much is the surplus here? 2,36,000. If you add up the 3, you are getting 2,36,000. That means your calculations are absolutely right. So this is the procedure of disposal of surplus. That's it. So this is the end of problem number 15. Come on, now we'll start the 16th problem. And this 16th problem is the last problem on calculating the surplus and disposal of surplus. So, see the problem carefully. From the following information is extracted from the accounting records of ECI Electricity Supply Limited for the financial year ending 31st March 2010. So here data is given: share capital 6 crore, fixed assets 116 crore, accumulated depreciation 40 crore. So last line it is asking you are required to determine capital base, reasonable return and disposal of surplus. So first of all, we will make the capital base. We'll calculate the capital base. So first of all, fixed assets. Fixed assets are given 116 crore. So original cost of fixed asset 116 crore. There is no contribution from customers for fixed assets. Unlike in the previous problems, we were having the customer's contribution towards fixed asset we have deducted, but in this problem no customer's contribution. So directly fixed cost, original cost of fixed asset 116 crore. Then accumulated depreciation, that will be taken under deduction item. Depreciation reserve fund 40 crore. Then intangible asset, that will be taken under addition items. Intangible asset 6 crore. Then investment reserve fund. So investment reserve fund will be taken under reasonable return. For calculating reasonable return, we take investment of reserve fund. Then contingency reserve. So contingency reserve fund is 4 crore. So contingency reserve investment 4 crore. Loan from electricity board, deduction item, loan from electricity board 10 crore. 12% debentures, so 12% debenture 20 crore. Tariff and dividend reserve 6 crore. Tariff and dividend control reserve 6 crore. Deduction item. Net profit after tax. This is the clear profit that we'll take for calculating surplus. For calculating surplus, we require clear profit. Customers deposit, deduction item. Customers deposit 6 crore. Current monthly average 7 crore. The monthly average of current assets. 7 crore. But there is one adjustment. The monthly average of current asset include 1 crore due from customers. Actually, amount due from customers should be deducted, should not be included in monthly average of current assets. So here the 7 crore monthly average of current assets include 1 crore due from customers. So we deduct 1 crore. The monthly average of current assets 7 crore minus due from customers 1 crore, outer column 6 crore. Then investments yield 10% return per annum. That means whatever investment, contingency reserve investment or reserve fund investment, all investment are yielding 10% return. Bank rate is 9%. You are required to determine capital base, reasonable return and disposal of surplus. So capital base, original cost of fixed asset 116 crore and intangible asset 6 crore. Then monthly average of current asset 7 crore minus due from customers 1 crore, 6 crore outer column. Contingency reserve investment 4 crore. Take the total of addition items 132 crore. 132 crore. That is the total of addition items. Deduction items. Depreciation 40 crore. Loan from electricity board 10 crore. Debentures 20 crore. Tariff and dividend control reserve 6 crore. And customer deposit 6 crore. We don't have development reserve. In the previous all problems we were having development reserve. But here we don't have any development reserve. Take the total of deductions item 82 crore. 132 crore addition items, 82 crore deduction items. The 132 minus 82, you will get 50 crore. This 50 crore is the capital base. Now we calculate reasonable return. Calculation of reasonable return. Return on capital base at bank rate plus 2%. In the problem, bank rate is given 9%. So 9 plus 2, 11% on capital base. 11% of 50 crore, you will get 5 crore 50 lakh. 5 crore 50 lakh. That is the return on capital base. Income on reserve fund investment. The reserve fund investments are given as 40 crore. And adjustment it is given all the investments are yielding 10% return. So 10% of 40 crore, 4 crore. 0.5% on loan from electricity board. Loan from electricity board 10 crore. So 0.5% of 10 crore, you'll get 5 lakh. Then debentures, 0.5% on debentures, 20 crore. 0.5% of 20 crore, you'll get 10 lakh. You'll get 10 lakh. We don't have development reserve. If we were having development reserve, we would have calculated 0.5% on development reserve, but we don't have development reserve. Right? So reasonable return, we got 9 crore 65 lakh. Reasonable return, 9 crore 65 lakh. Now clear profit is 12 lakh 20,000, so less. The actual profit earned by the company is only 12 lakh 20,000, whereas on the investment made in the company, the reasonable return is 9 crore 65 lakh. There is no surplus at all, there is a deficit. So clear profit 12 lakh 20,000, reasonable return 9 crore 65 lakh. So there is a deficit of 9 crore 52 lakh 80,000. 9 crore 52 lakh 80,000, there is a deficit. So since clear profit is less than reasonable return, hence there is no surplus, there is a deficit. So if there is a surplus, there is a question of disposal of surplus. Since there is no surplus at all, so there is no question of disposal of surplus. And it is illogical to say disposal of deficit. Deficit will not be disposed. That's it. So this is the end of problem number 16. So in these problems, first 8 problems we have done on financial statements, preparing the revenue account, net revenue account, receipts and expenditure on capital account, general balance sheet. First 8 problems. From 9th problem to 16th problem, we have seen here calculating the capital base, calculating the reasonable returns, surplus and disposal of surplus. Still 4 more problems we will do on replacement of fixed asset in the next video. So this is the completion of problem number 16. We'll continue the next problem in the next video. So if you are satisfied with my lecture, give a like to the video. Share the channel in your group, in your friend circle, so that more students can watch the video. Give your comments on these lectures, and finally, if you are not yet subscribed, subscribe my channel.